What's up, team? Crazy day in the market. Had to come on and do this video for everybody. No videos this week because the whole household's been down with COVID. Good news is, I'm a six-time COVID survivor now. So that's the good news. Bad news is I was supposed to be on my way to New York City right now for a nice weekend in New York City, and unfortunately had to cancel because of COVID, which sucks, but postponed now till Thanksgiving Day weekend. But I thought I'd take this opportunity, come in here and just really talk about what we saw today, what we're going to look for moving forward. By the way, the title of this video is Rest in Peace to the 2022 Bear Market. It's actually meant to be funny, people do the headlines to try and catch people watching their videos. That's what it is. So a month from now, if we make new lows, you could come back and tag me on this headline and say, you were wrong. I don't care. I want to call it to have some fun, right? Not call it to say, hey, well, we're right that it's over, just to have some fun. So don't put too much thought into that. Let's get into what we saw, what we thought coming into, what I thought coming into it, and how I managed today. Today ended up being a really good day. It ended up being a really good day because my ability to be quick to react to what we're watching and be agile and not be stubborn in a direction. This is the second time the market's done this to me, by the way, where I thought we were going to see a little bit lower before we ramped, and instead they did it right at the level that, potentially I should have just been looking to go bull at that level anyways. Last time that happened was here. Okay, I thought we were going to drop down and retag this level, touch it in here. And today I thought we were going to come back and retag this level before seeing a rally. So I was hopeful that the CPI print would bring us down into this GP level, 366, 365, build up this support base before seeing the rally. Although I did think we were going to go see new highs because this zone was notable when it broke through here. And I'll touch on that a little bit more in depth, in detail. It was a really good day. I overtraded. I've traded too many names because there's so many names. So okay, so many messages. There's so many names that look too good to me to miss out on the opportunity. One of them, which is what I talked about yesterday, was Upstart. Upstart was a big opportunity in my mind coming into yesterday. And I believe my exact words were, you got to keep eyes on Upstart in case it does something crazy. And it did. Because I was still thinking that this was a falling wedge on Upstart and that the earnings drop potentially is going to be the buy signal. And it'll go on a significant rally post-earnings. And that's what we've seen. We've seen 2 days now back to back. And today alone went up 27%. This is the first name that I believe is going to run 100% in the market. Currently at 56%. If we think about where 100% is, remember, you don't need new all-time highs for big opportunities in the market. 100% is just going to get us back into this level. That's a potential opportunity. That's why I wanted to play Upstart. Meta, because I've been all over Meta since the gap down. Since the, was it earnings? I can't remember exactly what it was. Meta. And I've been constantly playing Meta. Amazon. If you look at the Amazon chart, man, I was thinking about this yesterday and then today. Anytime you see a chart that looks, forget about the name, a chart that looks like it should gap down, Tesla's going to be the counter to this. A chart that looks like it should gap down, it's trading at the lows, it's a bearish kicker, almost a bearish Marubozu candlestick, which means bearish Marubozu is open to close, nothing but sell pressure, not green, obviously red. Bullish Marubozu would be green. So it's at its weekly low, it's at its yearly low. You would assume gap down. And then you get the higher open gap up. What should happen is a squeeze, because anybody that was in puts or shorting, they're going to have to cover this, right? Because it's gapping up instead of opening up as an inside bar. If it's opening up as an inside bar, you still have yesterday's high to use as your leverage on your, hey, this is where I'm going to have my stop. This is where bears are going to continue to short. So had we opened up within this range, then you get the inside bar price action. But when you get a gap up, there's no real resistance. So opportunity for this to run to 104. Another name was Net. I'm going to just go through a couple of these examples. I'm not going to go through all of them because there's too many. There's Net, there's Google, there's Ford, there's American Airlines, there's Shopify. I've been holding the Canadian banks, which went on a nice They were doing a little bit better. All of them, 5% is pretty good. For Canadian banks paying dividends, this is a very good trade, guys. But there's so many names. Look at this net, right? Should have got the gap down. We're trading at the new lows. And one of the things I really love to look for in these cases is names that are making a new low that don't get follow through, okay? Those are the ones that are going to give you the biggest rips, the biggest rippers, because all of that shorting, puts, etc., needs to come off once it starts to rally in the opposite direction. And then you get retail jumping on, and that's why you get a big candlestick like net today, 25% up. Huge rippers. I had this on my watch list for I don't know if it's a week or 2 weeks now. Potential explosive movers. All of these names are going on an explosive move right now. They also had explosive moves down the other day when things were looking pretty bearish. So these names are all on my watch list for looking for 100 to 150% rallies, significant moves, if the market doesn't screw us over here. And I'm going to touch on that. These names you want to keep on your, regardless if you like the fundamentals or not, who cares? They have a history and they show you the opportunity to rip, and they're all starting to do that now. BA shouldn't be in this category, but I thought BA might have an opportunity for a huge move, and it's already on that huge move. Another, I could put Neo into this range. Airbnb I could put into this range. Look at McDonald's. Nobody was buying quarter pounders of cheese today. Just these names, the opportunity that is there. And if you look at the percentages they gave today, great. So now let me talk about what I was thinking coming into today because of what we saw in crypto. So ability to adapt and not be stubborn. I thought maybe today would be a non-event if the CPI would print 7.9, 8, somewhere in that range, that it would be a non-event because that's what people were expecting, and we're dealing with all the drama that we have in crypto. Now, crypto is making a hell of a recovery right now because of that FTX debacle, right? But because I'm expecting a ripple effect from this FTX saga going bankrupt and crushing the crypto market, and the potential that today would print a CPI just meeting expectations, 7.9, that there's potential today is going to be a non-event. Well, that wasn't the case. The reason why that wasn't the case was because CPI dropped significantly. 7.7, yes, inflation is still high. We totally understand that. Everyone's like, oh man, look at the market rallying 7.7%. Inflation's at 7.7%, and people are like, oh, how is this bullish? You guys don't understand. The reason is because all the bear bets and all the hedging came off the books. Because everyone was betting for a negative CPI print, 8.1, 8.2, whatever, all those bear bets that were coming into big tech, which we had seen in the past few days or past week or so, because iPhone City on Apple being shut down, all those bear bets started to come in. The bear bets were being piled in on Amazon, Google, Meta, Microsoft, Apple, Tesla, because they're all trading at the lows, and we got this big CPI event. Of course, they could collapse, and we could start to see that significant drop. Had CPI come in at 8.1, 8.2 today, those things would have got smoked. But because they didn't, all that short covering had to happen. And that's what we saw at the beginning of the day and continued throughout the whole day. There was no significant pause. There was a slight stall at one point, and I'm going to show you it because also the market has been giving me these indications of these bearish patterns being bought up. We had a rising wedge bought up, and we had a head and shoulders bought up on the short time frame. So it allowed me to stay, okay, this is a bullish day. We're going to continue bullish, and let's see if we're going to close at the high of the day. But coming into today, thinking we're going to see a little bit more downside on the CPI print, but wanting to buy bull. The reason why was because looking at this price action here, the fact that we broke up over it, we changed this daily trend. We haven't changed the weekly trend, right? The weekly trend, we need to do a significant breakup over this 4,300 zone. Only the Dow has a chance at the moment to do that, okay? At the moment, it has a chance to do that. But because we broke this trend, which is similar to us breaking this trend in here, I would anticipate we would see some more upside. But I was looking for a zone to be hit, which was the GP zone. So when we lost the hourly the other day, I'm going to go in here, close this up. Whew, look at this. Jesus Christ. When we lost the hourly in here, because we had been setting up 4-hour higher lows along the way, we figured we would see more downside. Okay, so there's a higher low zone. Here is a higher low zone, and then we lost it in here. What we figured was, yeah, in here. Actually, I drew that wrong because I was talking about, the reason I'm saying I drew that wrong is because what I was talking about at fit was the hourly. Okay, it was the hourly chart in here. So what I was thinking was, when we lost this hourly higher low pattern, here's our low, here's our higher low, here's our higher low, here's our higher low, and then we lost it in here, that we would set up a lower high and then a lower low. So we did see that. We saw a lower high, lower low. This ended up being an ABC correction down in here. Now, you look at it and you say, well, that kind of just hit your target. Like, don't you think that was the target that it was going to get to because it was a GP? Look at the platinum zone reaction in here. If we go to a log chart in there, actually, I have that drawn slightly off, I think. I thought it didn't even tick at all. It did tick just slightly below. But I was looking at this. This was target number 1. I had 3 targets I was thinking about. 1, fighting a sneeze. Bear with me here. All right. Target number 2. Target number 3. Those are the 3 targets I was looking at before we see a rally that gets us up into this target, which I believe we are going to hit. Okay. So target number 1, I thought was not enough. Personally, I thought what we were seeing in here is a move down in here. You can see 1, 2, or you call that 2, 3, 4, 5, and then some nasty ABC correction in here, and then 1, 2, 3. I thought we would go 4 and then 5 at least down into here. 1, 2, 3, 4, 5 down, ABC up, 1, 2, 3, 4, 5 down. That's what I thought we were going to see. So I wanted to be a buyer down in here. Similar to this event in here, if you guys remember this on Friday, October 21st, can't remember what exactly it was, but I thought we were going to retrace down into this zone. If you guys remember back at that time, I thought we were going to come down in here and tag this zone. So there's something about being right, and there's something about being stubborn, and then there's being agile, right? My whole thing in trading is I do not need to be right. I do not need to, because I do YouTube videos, because I have a room that, if I'm wrong, it looks bad. Like if I'm wrong, it's like, oh, I gotta go fight this. That's the worst thing I could do for anybody that's following me, is to go and fight it and be stubborn when you're wrong. It's okay to be wrong. It's not okay to stay wrong. A lot of traders, knowing from experience of mentoring over 1,000 traders in my lifetime, over 1,000, is that they will stay wrong. They will be more inclined with staying wrong versus adjusting and being agile. Why? Because of the emotional attachment to the idea and the dollar, right? The dollar value. So if you're wrong on a trade, your P&L is working against you, and then you're attached to the money you're losing, and you want to fight it, and then you add more, and then you really blow up. Or the idea, whatever the idea was, maybe it's your idea, maybe you got it from someone else, and you're still being stubborn to the original thesis of the idea. Whatever that is, it's the wrong thing to do in trading. You have to take thousands of losses in order to be successful, because thousands of losses means you're cutting your losses very short, very quick. You're not taking big blow-ups. If you're only taking, 1, 2, 3 losses, then you're not really a trader. I mean, you're just holding, right? You're holding. That's very different. Traders, active traders, such as ourselves, we need to take thousands of losses because we need to cut the ideas that are wrong and not be stubborn against them, or be stubborn to the idea. So my idea coming in, wanting to go bull in here, each time, this is the second time this happened to me, is I'm ready to buy bull. Just give it to me. Bring it here. Didn't bring it. Today again, just bring it here. That's what I was looking for. If you brought it in here, I thought this is great, that we're going to do an ABC correction. And we would see them move like this. But instead, they did it very quickly off of the CPI print 7.7. Actually, I went and I looked at the 1 second chart from today to go look at that open. I don't know, can I get there fast enough to do this video? It looks like we're going to be able to do it. Let's go look at the 1 second on the CPI print. Actually, I showed it earlier on NQ. So look at this. By the way, if you do not have a position, you cannot catch that. Like, it's not possible to catch that. What you have to do is be ready to flip. Okay, 7.7, we knew anything under 7.9 could cause a squeeze. 7.7, mindset now is flip, play bull, right? Go catch things that are bull. But if you're going to say, like, you're going to buy that, it's impossible. Look at the gap on the second chart. So the second went from 377. The next second opened up at 381. This was a massive 45-point move, 1.2% in 1 second on a gap. Impossible to catch. But because I came into today thinking my original game plan is, if it breaks bear, I'm going to go in SQQQ because I'm assuming the market's going to go here or it's going to go a little bit lower. And the other option right away is to buy Tesla. Now, I did buy Tesla. It got into over $1 profits in TSSL, which I got in. It was like 1170. It got up to like 1280. And then Tesla was the only one that came back for the entire day. But because I have a habit of having the ability to buy lots of names and place my stop loss in there, I was able to have a good day because other names did very well. And I am swinging portions of those. And I'm going to talk about the mindset of the swing right now, which is extremely risky. I totally understand that. So your mindset is like, okay, I do want to be a buyer in here, but if it's not going to get here and we see something significantly change, you have to think about what significantly changed and how is it going to affect? Whoa, the CPI came in cold, right? 7.7. People, the average median was 7.9. You know, could have came in at 8, 7.9, 8.1, 7.7. That is very nice. So all the hedges got to come off. All the bear bets got to come off. Retail is going to come slow-moing in. And that's why we saw a huge squeeze all day today. Okay, huge squeeze. Now, there's been very few days in history that the market has gone, the NASDAQ has gone up over 7%. The last two times we've seen the NASDAQ go up over 7%, we're near the bottom of the COVID crash in 2020. It also went up over 7% during the bottom of the bear market in 2018. So two bottoms of bear markets. Now, it doesn't mean the bottom is in, although the video is titled Rest in Peace to the 2022 Bear Market. It doesn't mean the bottom is in because NQ did a 7% day. We saw 7% days of the dot-com bubble that didn't mark bottoms. Okay, we continue to drop down. We actually even saw a day during the COVID low that was a 7% day, and the next day gave it all back. Right? Let's go look at that really quickly. This is a longer video than normal. Right, if we go look at NQ in here, on that day, we went up 9.5%. That was on the 13th, March 13, 2020. The next day, it went down 10.89%. It's very different behavior right now because we weren't dumping on COVID, and you know we do have a little bit of a base that's been built up. Some bases are a little bit better, like the Russell's base versus what we see right now in the NASDAQ, because the Russell built up a base in here and the NASDAQ was closer to that bottom, just starting to try and build up a base right now, whereas the Dow is flying, you know, it's getting ready for a weekly trend change. So here's the thing now. We do have a trend change here on the daily. What we want to see right now is that this move gets immediate continuation. We do not want to see any fear come back in and significant selling pressure. So tomorrow, what we want to see is something similar to this candlestick, right? Percentage-wise is not there. But the candlestick the next day to give you the same behavior. You trade a little bit higher, but you don't need a massive bull kicker candlestick. Something like this. Maybe it starts flat. We do definitely need to cool off, but then it continues to trade higher. If we see one of those two prints tomorrow, and of course next week is OPEX week, you know, we're going to see, you better hold these gains next week, of course. But if we see that candlestick print or this candlestick print tomorrow, then we assume we will see the higher rally run. We cannot see anything, obviously, like a dark cloud cover, which is a candlestick like this. We cannot see anything like that, okay? If we see a doji, that's fine. A doji would be fine. We could cool off with a doji, but we cannot have something significantly bearish. We can't have a super lower open. That I would not want to see that right now. This right now I would not want to see. That would be a major red flag. Short term in here, because we have this trend change, we could think about an extension move from here up. Short term, right? Short term target. This does not mean that we're going to the moon, but it means there's opportunity in here for the market. Come on, cooperate with me here to see a rally potentially to 412. Okay, I like that idea, getting to 412 because of that resistance in there. And also, if we line this up and we think about, and it doesn't need to be tomorrow, and don't have FOMO, because I'm going to show you why you don't need to have FOMO. Okay, so what is that? Why did it do that? What does set mean? Anyways, okay, so a little bit lower. Okay, a little bit lower, 408. So 401 to 412, I'm going to like that zone, which, by the way, is coming back down, back into the big dog candlestick. This was, I think, the last significant CPI negative reaction we had. Those two candlesticks back to back on a weekly to give us a significant challenge once we get into those candlesticks near the top of the range. I'm going to assume we're not going to get stuffed at the bottom of the range, considering the buildup and considering the amount of hedges and shorts coming off the books right now. But in the short term, okay, in the short term, we broke through in here. So we had a support, a resistance, a resistance, a resistance, a resistance, a breakthrough, target zone, short-term target zone, 401, 402. Bigger target would be to get into the top 408 to 412. That we bull flag first before continuing into this range with an ideal hold of this backtest. That's what I would want to see. So tonight in the futures, I would assume we pull back a little bit and we form a bull flag. When we form the bull flag, we're going to want to hold this range and then look for the continuation into those zones. Here's what it looked like last time. So this is more, there was a little bit of consolidation beforehand, but we came back and we back tested the zone that was giving us problems before we continued to run. So I am thinking we could do the exact same thing in here. Okay, so run, back test, hold. Maybe it does this, back test, hold with a choppy OPX week next week, and then the continuation rally. If we get a more significant continuation rally, then we'll target to these higher ranges, 424, 439, the top of our weekly resistance. Is it doable? I love to think about indices in catch-up mode. Okay, so we see rotation. So rotation from one to the next. So if we think about what's been running lately, it's been the Dow and Dow stocks, right? The old market. Where is it? Where are you, Dow? The old market, right? Things like Caterpillar and Boeing recently. So this whatever else is, I'm forgetting now names that are on the Dow. Anyways, because it's up near its weekly resistance and the Dow has already run strong and the NQ is down at the lows and Apple's at its low, Tesla's at its low, Amazon's at its low. Microsoft's near the lows. That now rotation will happen into those names, and we will see NQ get an explosion. Okay, so catch-up mode, ES, compared to where the Dow is. Dow's over here. ES is not there. Look where NQ is. So this is where the opportunity lies. And of course, with growth stocks, right? Russell, to get up into here, growth stocks are going to see the biggest amount of percentage. To get no follow through after today's candlestick. How long is this going to go on for the rest of our video now? Okay. Okay, good. I'm not sure if you guys heard that, by the way. There's a car honking. I have this good mic that's not supposed to get anybody else's noise. So for us to get these types of candlesticks and not get follow through, like I just take my computer and throw it out the window, because that's not what should happen. Massive candlesticks, massive covering. We should see higher prices come, especially considering ES just got a daily trend change. A notable daily trend change. Not this type of a daily trend change. A notable daily, a pullback, and then new highs. So I do think the short-term focus is 401, 408, 412. But the big potential is we go run those weekly highs. We go test those weekly highs. And I'm going to use one example as to why. Because the dollar broke down. If you look at this run here, the dollar has been holding its gains. And for the first time, we are losing those gains. Okay? Rest in peace to Canadians holding U.S. currency, loving their accounts flying because of the exchange. This broke. This is a significant shift in what we're seeing the market do. So with the dollar collapsing, and of course there'll be bounces and stuff like this, this tells me that we should see a sustained rally in the market now. By the way, how much cash is on the sidelines? How much positioning needs to happen? Where is the potential for it to happen? It's NASDAQ stocks. So for me, my mindset right now is if the market were to fake us out after seeing the dollar do this, seeing the VIX, collapse. Look at this. Look at the US 10-year. Like all of these signals are suggesting that a top is in for those, right? Look at that. Look at that. It's broke. It's over. That's what it should be. I don't care if it bounces tomorrow. It should do one of those moves. That's what should happen based off its charts, based off a history of charts, historical patterns. If that ends up faking us out, then all you could do is throw your computer out the window or tip your cap and say, what can you do? You can't. You got to go for it. Like the signals are there. Everything is there. You got to go for it now. And that's where my mindset is. So that's what I'm thinking. The opportunity in Apple. Let's look at this on the day. Apple did, and it squeezed at the end of the day. Big squeeze. Excuse me, Susie, with that squeeze. Look at that candlestick. You tell me Apple's not going to at least go test those highs. I'm going to assume it's going to test those highs. We go look at Tesla. Elon must have still been selling today because it's the only one that gave us an inside bar that shouldn't have given us an inside bar because we're closing at the lows, because we should have saw a gap down. We should have saw a huge squeeze. And this is why I was all gung-ho for Tesla today, although it didn't do it. Maybe tomorrow. Huge opportunity here. AMD finally breaking out of this range. I mean, look at the opportunity on AMD. Like, come on, guys. Like this, like, you should be pretty excited. Like, honestly, I think you should be pretty excited. We will have to adapt if we're wrong, right? If they fake us out and the dollar breaks all the way back up, US 10-year breaks back up, they come out tomorrow and say, oh, we actually made a misprint. The CPI wasn't 7.7. It was actually 8.7. Somebody fat fingered it. You know, somebody's stupid, right? That, of course, that would never happen. But look at the upside opportunity. Look where Amazon is. Look at this. You tell me Amazon's not going for a gap fill? Come on. Like, market, don't be stupid. Netflix, this is a back test. That's a pretty good hold. Meta, we're in the gap. Look at the opportunity here for us to get to 128. Don't mess around. Google, look at the gap. Like these opportunities. NVDA is running like much stronger. Microsoft, bullish kicker. I mean, there's a huge amount of opportunity now that we did hold that GP. Boeing's a little bit hot. You know, it's been running on a massive tear in here, but you know, to get a weekly trend change now. Here's some names. Hood, Okay, Hood recently saw a 3 black crow bottom, so that's not going to be the best example. Look what AMC did today, 18%. GME should have got a new low, should have got a gap down, higher open, should have saw a better open, but this could be a fake out breakdown. I like those signals. Upstart, I already talked about. AF4RAM, Lucid, these names, they all have huge buying opportunity, okay, to see continuations of their moves. So you're going to want to have these names. You know, don't, obviously you can't trade everything, but the opportunities out there. Ideal that Mr. Market doesn't mess this up. We do get a year-end rally. We get a Santa Claus rally. Let's remember a few things, okay? People are extremely bearish when things are bearish, but the outcomes end up being significant. Look at down 21%, up 86%, down 27%, up 79%, down 22, up 48, down 36, up 73. Nasdaq's down 35, ladies and gentlemen. Down 48, up 125. Like how do you don't need me to tell you anymore. You get the point. You see it. Average bear market, 35% decline, 289 days. We passed that on the NASDAQ. Okay, so opportunity on the NASDAQ and seasonality that we have the opportunity to go in a year-end rally. Now, this is second-year Democratic president. It doesn't account for bear markets. Like just look at the bear markets I showed you, 1970, 1973, but because the dollar dropped, because the U.S. 10 years dropped, because inflation appears to be peaking. We'll see in December. That'll be the big one. December will be the big one. There's a lot of opportunity. Let's be ready for it. Get your mindset right. Look for higher lows. Look for bull flags. Let's see if the market gives us any red flags to say, don't go for the bull flag. And if it's not giving us the red flag, the bull flags form. Let's send the bears into the shadow realm. Peace out, everybody.